Thank you. It's good to be here. So, brief background about myself, in addition to what was already explained. I was born in Taiwan. I came to the US when I was 13, did my undergrad at Stanford. Afterwards, I went to New York, like most people who are interested in business. Back then, it was either consulting or investment banking, or you work for Microsoft. And programming looks kind of hard, and I didn't want to be in Seattle. So I ended up going to New York and work in investment banking. And that took me, after 2 years, to Hong Kong, because China was opening up, and the SOEs in China were trying to go to New York to get access to the capital. So I went to China for the first time in 1995. I looked to Shenzhen, and the place was pretty underdeveloped. It was not interesting. I'm like, man, it's going to take China a long time before it gets meaningful. And after investment banking, I tried to do growth capital, private equity investments. But that was mostly in Southeast Asia, Taiwan, Hong Kong at that point in time. Not much was happening in China. Then the internet came about with Netscape, and people saw this thing called Yahoo. It looks kind of interesting coming out of Stanford. And then I was still in Asia at that point in time, and a bunch of us got together, wanted to do internet startup. So during the last bubble, I did 2 startups. So both of them were not successful. Thank God we didn't lose much money. We get most of the money back from investors. And I came back to the US thinking, what should I do next? And I ended up joining Bessemer Venture Partners and went to China in 2005 with Bessemer. And that was going to be the second phase of my career, try to apply what I learned in the last bubble to the next wave, if there is a next wave. And the bet back in 2005 for me was that China was going to be big in internet space. I was working at Goldman Research in Hong Kong for a brief summer, and the research report I did for Goldman back then was something on a broadband PC internet penetration rate in China, try to foresee how big that market could be. I distinctly remember in 2005, the internet user base in China was around 200 million, roughly the size of India today. I remember in 2005 when I went to China, Baidu and Alibaba market cap was about $5 billion, and Baidu was publicly listed company. The price went up 3 times during the first day of trading. Everybody thought it was a bubble. Everybody thought this is crazy. There's no way a company who was very small, I remember their revenue, the 12 months before they went IPO, revenue was $11 million US. And this is a company that's worth $5 billion. Clearly, something's not right. I remember in 2005, Google, as the most valuable company in the world, was about $100 billion US in market cap. And the world had about 1 billion internet users, mostly on PC, mostly on narrowband, not even broadband. Only Korea, South Korea, Japan, and US had real broadband PC internet users. In China was narrowband converting, migrating to broadband, very similar to where India is going today. And then this thing called Yahoo, Alibaba deal happened. And Yahoo's valued at $5 billion. And people was like, no, that's crazy. These guys just sell fake stuff on the internet. They don't even sell the stuff. They just have a marketplace and people put ads on it to sell the stuff. How could that be worth $5 billion? And fast forward to today, at the end of this year, the world will have 3 billion internet users, mostly on mobile. Going forward, PC internet penetration was not going to increase that much, because if you look at ISPs and fixed line operators around the world, they're very inefficient compared to mobile operators. So you're more likely to see more people using smartphone to go on the internet. From 3 billion to 4 billion to 5 billion, most likely they will be buying cheap smartphones rather than an expensive Samsung or iPhone. Just by sheer law of averages, you need to have a lot of cheap phones to power more people to go on the internet. So this is where someone like Huawei, Lenovo, and interestingly enough, Xiaomi will have huge growth potential because the phones will be cheap enough. A Xiaomi phone that I have costs $100 US. And the spec is very similar to any of the Samsung Android phone you will find. And now they're working on, there are rumors that the phones will be as cheap as $50 or $60 per phone, US dollars. When you have a phone that's 2 gigahertz of RAM and allow you to be able to have internet access in a third world country, it becomes very attractive as a phone that people will buy. I remember when I first invested in Xiaomi in 2010 in April, it was just 14 people, 15 people, and a very crazy idea. They only had 3 full-time founders at that point in time. The rest of the team was yet to be recruited. And this year alone, based on the projections that the CEO pronounced on his Weibo, they probably do about somewhere around $8 to $10 billion US in net sales this year, 5 years. And the company is profitable, according to the blogs that he has posted. And for Q3 this year, they sold more phones in China than iPhone and Samsung. And it was a pretty big news in Seoul. I still think Samsung is a great company. People shouldn't worry. But the speed of growth that Xiaomi had caught a lot of people by surprise. In India, on Flipkart, the #1 e-commerce website in India, in I think 10 minutes was it? They sold like 20,000 phones for a Chinese brand that no one in India had heard of before. 10 minutes, 20,000 phones. So the speed of change that we're seeing in emerging markets for cheap smartphones to get on the internet is quite revolutionary than anything that we have seen anywhere else. And I think the future would be very interesting if more people get on the internet and do stuff. In India, as of now, the 150 to 200 million internet users are mostly on narrow broadband. When's the last time anybody surfed the internet on narrow broadband before? That was back in 1998. What can you do on narrow broadband, narrowband PC internet access? Not very much. So if the West world cannot do broadband because it takes too much burden on the part of the fixed line operators to roll that out, then the 3G guys, 4G guys will have a huge advantage, and most of the stuff will be happening on mobile instead of on PC going forward. And now, if you look at how the world evolves, it will be very interesting to see how some of the Chinese or Japanese or Korean business models in mobile internet gets propagated, not just in the Asian countries, but in emerging markets as well. You look at for e-commerce, the biggest e-commerce player on mobile are Amazon and Alibaba and Jingdong and Xiaomi and eBay. Of those 5 names, 3 are from China, 2 are from the US, and not even including Rakuten. If you look at gaming, most of the popular game titles, there are a couple in Europe, but the rest are in Japan and in China. That's on gaming, which is the biggest method to monetize traffic on mobile internet. If you look at on-demand mobile services, sure, Uber is worth arguably 18 billion, supposedly raising money to 30 billion, and Airbnb is also great, but there's only a few on-demand mobile service players that's here. And look at, and it's growing, granted, and then there's a whole bunch in China, company like Didi and Kuaidi, which are taxi booking app in China. The daily transaction volume is somewhere between 500,000 to 1 million a day, depending when they have subsidy or not. And worldwide for Uber is roughly around 1 million. So the size is very comparable. So if you have a country like Japan, like Korea, like China, in which you cannot rely on online advertising revenue to monetize all the traffic, you have to figure out a way to do transactions, to facilitate transactions, or facilitate some kind of purchasing of virtual items or physical goods or services. That methodology, that mentality, that know-how to get users to pay money out of their own pocket for stuff, it becomes a very interesting if that kind of model and way of thinking could be exported elsewhere. I look at the numbers. Between January 2007 to now, if you look at the market cap lost by BlackBerry, Motorola, Nokia, and we did this at the end of April this year, is roughly about $73 billion in market cap that was lost. If you look at the market cap gain by Apple, mostly Apple, is roughly about 447 billion. That swing over a 7-year period is pretty impressive. And Xiaomi, supposing this rumor that they're racing around, and the valuation, according to the rumor, is roughly $40–50 billion. So it is impressive for a company that's only 5 years old, not even 5 years old, can command that kind of rumor valuation in the marketplace. And they're mostly in China today. I think, according to the CEO, less than 10% of revenue come from China today, but the ratio will shift over the next 5 years or so. And it's very interesting to see how the world will evolve in the next 5 to 10 years that's dominated by mobile devices. And with all the hardware that's out there, people will be using that to do a lot of different things that will disrupt traditional offline economy. How many people in this audience have not used Uber before? Interesting. So most have. I use Uber every day because I live in the city. Just from the city to come down here 2–3 times a week, you have to drive. After a while, for me, it's tiring because I have to go to China every month. So I end up just ordering Uber X to do it. Uber is still too expensive. But Uber X, it costs about anywhere between $50 to $70 to go from San Francisco to come here. So it's if you look at gas, do a round trip, it'll cost you about $50 anyway. So it's the difference is not that big. If you do it often, you feel that it's much better because you can actually rest and sleep inside Uber or make phone calls. And whereas driving, you have to focus on it. So I can see the value in San Francisco as well. Parking so hard, you can make that happen. And a lot of it is also having abundance of first-generation immigrant in this country who don't mind being Uber drivers. Every 10 rides I have, 9 are by first-generation immigrants. And the quality of Uber driver versus taxi drivers are much better because there's a rating system. After every ride, you get to rate your driver. And the driver rate you as a customer as well. So you get both sides to behave better than in the taxi era. And I don't have to give a tip because the tip's taken care of by Uber already. So it's charged into the rates. So I don't have to worry about how much to tip it to make sure the driver is happy. The driver always gives me a bottle of water to make sure I'm happy so that I rate him well. So it becomes a very virtuous cycle. That experience is very pleasant. Then you give them the credit card. If you trust Uber with a credit card, you don't ever have to about paying because you click and it's done. And at the end, you get an email tell you that how much the ride was cost. So if you have to expense it, you can do that easily. The whole experience wasn't possible 3 years ago. It wasn't like that. And in the rest of the world, only 6–7 countries have that kind of experience. A lot of countries have not seen Uber yet. So for companies like Uber or Didi, even in Chinese companies, they don't have to stay in their home countries. They can actually take the experience they've learned and go to other countries, whether invest in a local team to do that or do their own business. You can imagine the potential growth would be very interesting. And that's why it gets me excited to invest in companies like that can go global. But in every category, we're seeing stuff being disrupted. I am an investor in a company called Wish in San Francisco. And Alibaba has a similar service called AliExpress. What both companies do is take merchants that's on Taobao and encourage them and help them to sell overseas. So something on Etsy can cost $50, but on AliExpress or on Wish, you can find it for $8 or $5. It's not branded, but looks very similar, so that people actually buy it. And initially, you had to wait 3 weeks, 4 weeks for it, and now both companies have cut down the waiting time to something as quickly as a week and a half. And even Amazon style will cost 5 to 7 days to deliver. So waiting another 5 days for something that's really cheap is not a problem for most users, especially for women users. And so we see growth for Wish and AliExpress extremely fast. When I invested in Wish back in end of last year, their daily volume was about $50,000 US. SKU was roughly about 100,000. Fast forward today, based on numbers that the CEO has told the press before, SKU come from 100,000 to over 30 million. For any Walmart store, what's the number of SKU inside the average Walmart store? Less than 200,000. And a Walmart is huge. Can you imagine searching for 30 million SKUs? So if you have a team that came from Google or Yahoo that understands search, that can figure out a way to solve this matching problem, to take relevant SKUs to show to users, so they don't have to search and spend time on it, and look us through quickly, and based on your choices, they figure out what else will interest you. Have an algorithm that does that. It makes it a lot simpler for a user to pick stuff. They can do a lot of A/B testing within the first 2 hours. New products come up, see how users react worldwide, and then figure out how to place these products later on for the rest of the day. It's very interesting to take this search problem to here so that users don't have to search anymore, can just browse and enjoy what they get. And that kind of user experience is very interesting, and it's more possible to be developed here, but the back end of recruiting the merchants had to come from China, because China has the most number of online merchants. On Taobao, with a company that's doing $220 billion in GMV, that's more than Amazon and eBay combined, there are 8 million merchants on it that are experienced at selling. Even if a lot of them, you can argue, maybe selling fake stuff or not efficient or what have you, all the kind of excuses, the top 10%, I will argue, is still very good. They can produce stuff, send stuff, that's every exotic stuff you buy in Walmart. Therefore, the user experience over a period of time will be as good as what you can get from Walmart. You can do it from the comfort of your bed, of your home, in your car. You can do it whenever you want to. So the cost of opening up a Walmart store worldwide varies, but it will be expensive. And it will be natural limitation in speed, how fast Walmart can roll out. And Walmart's already the most efficient retailer in the world. Imagine your offline experience in China or in India or emerging markets elsewhere. If you have mobile commerce, it'll be much easier to do that and take what couldn't have been possible for retail, shift to mobile. And that's super exciting for guys like us, because we want to see how big these companies can get and be. And this is why we're in this business. So mobile commerce for China and US alone is a $20 billion market. It's a $70 billion market in 2013. It was $20 billion market only about a couple years ago. And it's just interesting to see how that market has exploded in the last 2 years. And we have a unique advantage because we were investor in Alibaba back in 2003 and remain in touch with the management team and advise them on some of the US deals and China deals as they expand beyond just being an e-commerce company into finance and into social networking and into investing in technologies that will help them to become even better at what they do. We're investor in House. How many people have used House before? So for the people who do have a house that they want to decorate or remodel, there's lots of ideas you can get on it. And now you can buy stuff from House as well. And so you will see going forward more and more companies that only can have sharing of what's interesting and what's cool, people's style you can follow to get new ideas. At the same time, one click away from buying the stuff. Most companies I've noticed since I come back to the US and invest in the US tend to use an affiliate model. Have stuff that's interesting, show people, and then get users to go elsewhere to make that transactions. But that experience is broken because as a consumer who shop online, you don't want to go to 20, 30 different places to buy stuff. You can buy from one place like Amazon. It makes your shopping experience a lot better. So going forward, I will argue you will see more companies like House or Melishuo or Wish that you can buy stuff on the website or on the app. The merchants, the inventory is elsewhere, somebody else's, but the app or the website will be responsible to make sure you get the stuff delivered at the end of the day, and you don't have to go outside of the app to complete it. For people who shop online a lot, for younger users, this becomes very, very attractive. So the experience of shopping on the mobile device is increasing, yet the offline retail experience in many countries are not great. So over time, it intersects and exceeds and more people would just end up not shop offline. When I went to China in 2005, I remember the smart money in the US thought that e-commerce would never take off in China. Because look at what happened in the US and say, what made US e-commerce successful was there's trust. People can trust each other using credit card and so forth. There's delivery, there's FedEx and UPS and so forth. So stuff will deliver on time within a week. And there's payment. So without any of that, how can China have e-commerce taking off? What people do not understand, and I've lived through it when I was in China, is that if the offline experience is so bad, and you don't have stuff, don't have the SKU in your city, you can wait a month for something to come by. And over time, these internet companies get better and better at what they do, so that the waiting time goes from a month to now. In most cities in China, the big cities, the top 300 cities, you can get your stuff delivered within 24 hours, even faster than Amazon in the US. And all it took was 8 years. So anything that would order on Taobao, you live in one of the top 300 cities and get your stuff done, delivered to your house within 24 hours. And in the big cities, the top 50 or so, you can get stuff delivered within a day. You order in the morning, you get it by night already. Because labor costs a lot cheaper in China than in the US. So you can actually have better service as a result. So this kind of stuff is happening in China. I lived through it. It's a matter of time. Those practices get spilled over to India and other countries that's going through urbanization at a rapid rate. I know SoftBank, after they made investments in Ali, stayed with Ali, and then post-IPO, their stake in Ali is probably worth about $100 billion now. And all they have to do is sell a little bit of stock. They have the cash. They can aggressively invest in India, Latin America, and other countries that have just invested in the top e-commerce company. One of them will do well. And so we can see patterns repeated on what happened to China elsewhere. I remember when I was living in Beijing in 2011, top 5 of the Indian VCs, 2 came through. And they actually studied our portfolio, knew our portfolio inside out. I was very impressed. They asked better questions than American VCs do. And I asked them, why don't you go to the Silicon Valley where innovations are? They asked people in Silicon Valley about what to do in India. They said it's not as relevant because China went through urbanization at such a rapid pace. And there are a lot of models that doesn't require advertising that make sense, that we rather look at China, look for examples to see how it could be replicated and, of course, localized in India, which is what the Chinese entrepreneurs did 10 years ago. And so another thing we notice is that in the mobile internet era, it's easy to expand from country to country. Wish was able to go to about 20 countries in a very short period of time. Because once you have good user rating in one country, getting Google Play or Apple App Store to allow you to go to another country is much, much easier. You just have to change the interface and it's okay. And you're still selling the same product anyway. So having that easy way to expand from country to country is much better than the PC internet era, where you constantly have to buy for Google keyword search, whether it's SEO, SEM, spend more money to build up a brand. And if the App Store recommend you as one of the product, because of a prior track record in another country, it's easy to get users in a new country. And that wasn't possible before. And so the world has become a lot flatter in the mobile internet world, and makes it easier for global expansion as well. And wearable is a hot area where we're definitely looking at, and there are interesting stuff coming up. Apple's doing this thing, and other OEMs will react accordingly, but we've seen innovations. One thing that interests me, though, is that most of the wearable devices that I've seen in the US, most of them cost over $100 US. A lot of them cost $129 or $149. I think that's ridiculous. Even though it's high margin on those products, the addressable market, people can afford it, is a lot smaller. So it becomes more niche, more of a toy. But if you look at the Xiaomi playbook, if you can drive down the cost to something that a mass market can afford, people get excited about it, people buy it. Once you have a big base, you can figure out what are the other value-add services you put on top, and you do big data analytics on top of that. It becomes a lot more interesting as a play because you know a lot more about users of more users. And so it becomes more than just a hardware play. There's more activities you can do. How many people here have played with a QQ or play with a Taobao website before, or try WeChat? Okay, about half. So the ones, how many have used WhatsApp? If you look at WhatsApp versus WeChat, which one's a better product? Almost unanimous. WhatsApp is really good as a communication tool. It allows you, especially in emerging countries, to save money and do VoIP. But the product by design wants to be very focused, very basic, doesn't have a lot of bells and whistles. If you look at WeChat, for the people who use it, there's just tons of stuff. You get your daily news on it. You find out what are your friends think are the most interesting articles or stuff they read of the day. You can actually use WePay to buy stuff on that. You can use that to buy virtual items to play games. The stuff you can do on it. I get people want to schedule meetings with me on WeChat. So constantly people say, can we meet up today or tomorrow, etc. I'm waiting for WeChat to have a way to integrate that messages into my calendar, so it's easier for me to use it. But it's becoming more than just a communication tool. It's sucking up more and more of my time every day on WeChat. Right now, I find myself spending 1/3 time on WeChat, 2/3 time on emails, and I'm more of an exception. In China, the ratio is definitely the other way around. People spend probably 80% of the time on WeChat, 20% of the time on emails or other things. And when the product becomes like that, it's no longer social networking anymore. It's no longer a WhatsApp. Becomes a way that runs your life. And this is why Alibaba is reactive to that and trying to find other ways to take time away from users having spent time on WeChat. And that's a lesson that most American users or American internet companies do not get. Is to keep on talking about focus. The product itself becomes a great tool for one specific purpose, but it doesn't become a way to suck up a lot of your time as you do other stuff. Facebook is great because it can do that, and in a mobile internet era, we're still looking out for that kind of app that can do that. And in China, it will be very interesting to see how WeChat continue to grow and monetize and evolve. One thing that companies like WeChat hasn't figured out is how to do globalization. I remember distinctly they tried not to expand aggressively, but focus more on Asia, specifically Greater China. And I think in hindsight, I'm hoping that they realize that it's a mistake, because the kind of things they could have done in Asia and outside of Asia, they could be bigger than WhatsApp in emerging markets, not just in China. And I think the next crop of Chinese entrepreneurs, if they see Xiaomi do well in globalization, I think more and more companies will have the guts to try global markets and become more globalized. That's why I think being first-generation immigrants in countries like US and elsewhere, where you can see a big internet market grow and evolve, but at the same time know what's happening in another market that may have very different lessons, is very interesting. That you can look at what's the best practices from multiple markets and come up with the most competitive product on a global scale. This is not a skill set that was valuable 10 years ago. It didn't matter about that 10 years ago. But I think for the next 10 years, it will be very important for keep people to focus on that. When I talked to Wish the first time, I asked him 5 questions. In 5 questions, I was able to make a decision to make an investment. I don't think I'm smarter than most VCs on Sun Hill, but a lot of people met them, didn't get it, and passed. The 5 questions I asked Wish was, what's selling well on your app? Is it branded goods or unbranded goods? And they told me it's unbranded goods. From that first answer alone, most VC will say, this is not interesting, because you can't sell, you don't have a brand relationship. You're not selling the mainstream stuff. So it's not interesting. The second question I asked them was, who's buying it? Which cities in particular? Is it the New York, LA, San Francisco crowd, or is it elsewhere? The answer is elsewhere. And that second answer, questions for the second answer will also knock off a lot of VCs, because you're selling cheap stuff to cheap people. How is that an interesting business? But the people who turn them down do not realize that that's how Taobao grow. If you go after, in China, what we call 屌丝 users, or the mass market users, and anybody who knows that, just start laughing. If you can grab the attention of those users who have time, may not have a lot of money, but they are very vocal on the internet. You make them happy, they will tell their friends about it, and the cost of marketing goes down dramatically when you have word of mouth effect amongst a very interesting user base that spends a lot of time on the internet. And that's how Taobao grew. Taobao get 屌丝 who don't have much money to sell stuff from the friends they know or the factories they know onto the Taobao website, and other users who are屌丝 themselves who can't afford buying a lot of stuff at a high price, and they're looking for stuff that's cheap. And you get more of them to do that. You have more SKUs on one hand, you have more users on the other. The world effect becomes taking place, and the marketplace start to flourish. And that's exactly what happened to Wish as well. He's selling stuff from China that's really cheap to users in Louisiana, in Mississippi, or Florida. Not that any of those states are cheap, it's just that you have people who have disposable income. They're young as they're growing up, and in the offline world, there's just not that many SKUs you can choose from. You can buy stuff that's cool, fashionable, and really cheap. Why not? It makes sense. And once you have marketplaces start flourish, you can take that. Third question, how much are you selling beyond the US? How fast can you globalize? And for a company that just started experimenting with selling for 6 months, they said 60% of users in the US, 40% overseas. And to see a company that's only 6 months into it have 40% of the users coming out of the US, that tells you that the product they're selling is highly scalable on a global basis. So you actually have a chance to go address a huge market very quickly, very early on. After the first 3 questions, I was already sold. The other 2 questions was just double checking. But after the first 3 questions, I can figure it out. I can help them because I lived in China for 8 years. I know e-commerce market really well, invest in Xiaomi. I can help them recruit and suggest candidates to run their supply recruiting team in China to help them. And they already figured out how to sell on a global basis 6 months into it. And so it becomes a very easy decision to make that these are the right guys to back. And that kind of thesis, that kind of methodology, I think is not particular to Wish, but it will be applied to a lot of categories that have products or services that can scale, have a global need. And whoever can figure it out quick sooner can have a company grow 10x in 1 year, no problem. Travel is another category we're excited about. It is a market that takes a while to get a lot of revenue, but it's a market that you can actually generate quite a bit of traffic early on. The thing about travel is that it's more or less a low frequency purchase. In China, what we learned is that you want to be in business as high frequency of usage. On average, Taobao, initially people go to Taobao once a month. Over a 3-year period, becomes twice a month. Over another 3-year period, becomes 3 times a month. Now on the average users number of visits a year is roughly 51. Basically become a weekly thing on average. But for the more active users who are younger, living in outside of tier 1 cities, the usage obviously sometimes even daily. So you have high frequency of usage. You have as a company, you have a great relationship with the user. You know what they're getting. I freaked out. My wife freaked out 3 years ago. We got an email from Taobao. Says, we have been with you for 6 years as your child was born in 2007. And we appreciate the years you've been with us too as an active customer on Taobao. So on this particular day, we want to give you a discount on stuff you can buy for your daughter. We're like, oh my God, these guys don't even own inventory. Yeah, they know exactly what my life is like because they have so much data about our purchasing pattern. That's amazing. And they're just barely scratching the surface. They can invest more on big data analytics. They can actually do a lot more to upsell in an amazing way. This is why the company is so valuable. And today, at a 1x GMV, I think the company, if you ask me, in the longer run, is cheap. I've seen Ali grew from 5 billion to now close to 300 billion in literally 8 years. And that's primarily a Chinese company. And the world out there is 5 times the size of Chinese internet space. If Taobao from this point forward figure out globalization, and it's not that hard to go after emerging markets, their valuation can easily triple, if not quadruple, over the next 10-year period. And I guarantee you, it will be a very stock to buy because there's really no competition. No one else has figured out how to do the things they do. So it's up to them to figure out globalization. If you can do that, the market, the demand is there. Why is Tencent scary? Because on WeChat, how often do we check WeChat a day for the people who use WeChat? 10 times? 20? 100? In theory, it's stickier than Taobao. Taobao, you go there a day to shop, maybe 2-3 times a day. But on WeChat, if you do 150, 200 times a day, every 10 minutes or 15 minutes, that frequency of usage becomes very, very interesting. So this is why for us who grew up investing in consumer internet space in China, that's almost one of the first questions we ask is how often do users come back? What is your retention rate? Because from that, you can try to project how sticky or how valuable this potential thing could be. And you figure out the addressable market and how sticky it is, you have a sense of what kind of price you want to pay on this company. And that's what we're trained to do because we've seen it. So lots of interesting company in the travel space, but the one to get over $1 billion, there are not as many. And we think that China could be an interesting player in this game, and some of the existing listed companies are interesting because they have a lot of room for growth because it's so hard to scale in travel. How often do you book a trip? Maybe 3 times a year, maybe 5 times a year. The frequency of usage is lower. Therefore, it means the ones who are already big can go bigger, and the ones who are younger, it will take a lot more time to get there. So focus on the ones that are already existing. And we're an investor in Qunar, and we also are a partner with some of the other companies through our portfolio investments. On travel, the key stats is that last year in 2013, 97 million unique overseas visits generated by Chinese travelers, roughly by 60 million Chinese travelers who traveled overseas last year, 97 million times. And a year ago, the same group of people spent $120 billion worldwide on the travel. And that travel mostly is in Southeast Asia and Hong Kong today, with some to Europe and US, but not as big yet. Over the next 5 years, that will change as more Chinese users have more disposable income. And now you see a lot of group tours, people in big cities like New York and LA and San Francisco, London, and so forth. Over the next 10 years, you will see more DIYs. And you will see a lot of younger users use the devices they have, the Chinese version of Yelp, the Chinese version of Uber, etc., and be good at it. And when they go overseas, they will use the similar app as well. So you will, in my mind, you will see a lot more partnership or competition between the Chinese interesting apps, popular apps, and the US apps. Should Yelp partner with China Yelp, Dianping, so that there can be more sharing going on and the content can be translated in different languages, become more useful to all the travelers. You will see stuff over the next 10 years, and the previous 10 don't really matter because each country is isolated. And over here, we think we have a unique advantage because we have investments in both markets in the travel space in the US and in China. So we have a better sense of how this could evolve. Some of the trends that we're seeing, it's everything is everything. People are sharing everything. Everything's on mobile these days. A lot of stuff is connected. It will become increasingly so. More big data analytics analysis can be done. I think the surprise we had, my wife and I had with Taobao, is just the beginning. There should be more. They should get to know me better. Some of us will feel worry a bit about privacy issues. That concern mostly relies in Western Europe and in the US. In China, a lot of users don't care about that, don't mind that, and you will see a lot more interesting services that can come out as a result of that kind of a mindset and environment. Again, we think that a lot of verticals will be disrupted by mobile, and the areas that we're looking at are in transportation, starting with Uber, but there are other things in entertainment, in Fintech. In China, the SOE banks tend to have a monopoly on a lot of things, and the WTO hasn't made enough of impact on that. But all the internet players like Ali, like Tencent, know a lot about our behavior. So they also have a lot more credit history on the merchants who sell on their platform and the users who buy stuff. Therefore, they're in a better position to make microloans to some of these merchants and users. And that will be more interesting to disrupt the way that the traditional lending has been done. So over the last 2 years, for people who are familiar with China, Fintech and peer-to-peer lending has become a huge and popular topic and area to make investments. And over time, as China's costs rise, a lot of innovation that has done in the US, enterprise productivity, will be interesting. So far, we noticed that the China SMBs, small, medium businesses, tend to only want to pay SaaS services that can generate new business for them rather than just improve cost structure. And on On-demand mobile service is another area that we are excited about. We think a lot of services should be done through mobile in a way that you can't do before. You look at education example, the top tutors are mostly in the big cities, yet the demand for tutoring services is elsewhere as well as in the big cities. You don't have a good tutor, good teacher in your city, what do? So you start seeing companies innovating, having the tutor broadcast from the major cities and making sure that in the smaller cities, whether there are classrooms you can rent and there could be projections or something over the internet so that people can have a chance to participate. So instead of a session being running to 300 students, a session could be addressing to 10,000 students. It becomes very interesting, and we're seeing innovations from gaming where tons of players are coordinated to play a MMOG game, taking that technology, come over to education into completely unrelated areas because the technology for delivering to mass users can be applied to another category. And stuff that's very interesting, and we think that down the road, whether it's for India or other countries going through urbanization, something similar in a different way could happen. The principles could be very similar, and that's the exciting part. From wearable to livable, there are a lot of stuff that's going inside homes or automotives that we think are interesting. Xiaomi has invested in a lot of companies. I think according to Beijing, as many as 20 to 30 companies. And all these companies are funded by entrepreneurs who are in the hardware space. They can make speaker phones. They can make even air conditioners and air purifiers. A lot of different kinds of devices out there. And a lot of these devices are not smart right now in China, and are overpriced because it takes multiple layers of distributions to get a product to the end user's home. If there's a way to drive the cost down, bypassing those layer distributors, and sell on a popular platform like Xiaomi.com that already has 3 million, 4 million daily unique visitors, you can actually launch new product very quickly, reach a lot of people, and show them that what we have done for smartphone can be done in other categories as well. Then people are naturally going to be interested to buy stuff that costs 1/5 the cost and have same, if not better, performance, and backed by a brand that's proven in customer service. So they're launching a lot of these new products initially under the Xiaomi brand, which we think are very exciting, and we're investing in some of those companies because we think that can change, improve people's life. Air purifier is a good example. For those who have lived in Beijing, it is miserable. All my friends from Beijing, I lived there for 2 years with my family, come to the Bay Area. First thing you notice, obviously, oh my God, the air is so fresh. And you buy an IQ Air, Blue Air. Blue Air costs $500 US per machine, and IQ Air costs $1,000. And when we're trying to figure out how many to buy in a home, should we buy 2, should we buy 3? It's hard to figure out which room gets priority over the other. But if a air purifier only costs $150 or $100, if we don't know what the final price would be, if it costs as low as that, you can buy multiple and not worry about it. And so the quality of life will be better under the circumstances, and people will be interested to buy because you don't have to go through a lot of distributors anymore. You can get directly online. So this kind of instance and examples are happening in multiple categories we think are very exciting, and it would be good for the consumer as well, especially in emerging markets. So the next area is more on the enterprise. We think that a lot of stuff that's happening in the consumer space will have ramifications for enterprise space as well. A lot of sharing could be good for enterprise, and a lot of data analytics can help the enterprise to run their business better in a way that's not possible before. Software used to be so expensive. If you can do stuff on the cloud, on AWS, if you can do stuff that has a faster time to market, so user can play with it and give you feedback so you can make changes and come up with a product that's better in a shorter period of time, it has ramification throughout the entire enterprise, and it makes it easier for an enterprise to be more efficient as well. So that kind of knowledge that you gain from consumer internet space is already spilling over to enterprise. So the cost of software or as a services have come down dramatically over the last 5 years. And I think that's good for everyone. So in 2010, when I invested in Xiaomi, this was a popular pitch that they give to investors. There were only two who invested in Series A, only two found out about it. But in Series B, there were more people involved. And the pitch they give was they were the only team in China that knew internet, software, and hardware. A lot of mobile OEMs in China may be big, but they don't know internet. They don't know how to come up with a product that's minimally viable so you can test it, people give you feedback, and you have fast iterations. For their OS, which was Android kernel based, called MIUI, they launched their first version within 3 months of the company starting. And every week, they add patches to it, upgrade the OS. And they had users from not just in China, but elsewhere who give them feedback that this is great, this is what Android should be doing. And they may give you feedback on what I think you could do better. And a lot of people translate a Chinese OS into English and other foreign languages because they thought it was easy to use. The people who do that are the techies, or in China we call it the geeks, but the most rabid fans who really understand technology. They can see something that's interesting and they will, through an open environment, happy to contribute and help. I love that culture about the US and Western Europe, especially in the US. And that kind of impact, Xiaomi, how they get started, so they start to realize that they can have a very open relationship with the developed community out there and exchange ideas and incorporate people's feedback into what they do. So every week a new version is upgraded. And even when the product was launched, they get feedback, mostly complaints initially from people. And they take that and they actively incorporate those complaints into the next version of design and upgrades so that consumers feel that they were listened, they were heard. And having that approach is very, very different than a Apple or a Nokia or Motorola or BlackBerry. When was the last time you make a complaint to Nokia or Motorola or Microsoft or BlackBerry and have a comment be addressed and heard? And in Xiaomi, they can build a culture that actively does that and engage the users that way. And so because they have users who are interested in what they're doing, I remember they ran a campaign before launch, their first phone. It was about history of your phone. So it encouraged users to share how many phones they've owned in their life, what they like or didn't like about their phones. And about 570,000 people participated in that campaign to share their experience in one way or the other of the phones. All the Xiaomi executives started first. So Lei Jun actually listed most of the 50 phones he ever had in his life and talk about what he liked or didn't like about some of the phones. And when I saw the number, I had the guts to invest more money in a company before the phone was launched. The valuation of the company went from below 100 to over 100 to, at this round, right before IPO, $1 billion in valuation before the phone was launched. But when I look at there are not many people already participating in a marketing campaign, which cost them almost zero amount of money to market. You know that there's a lot of people paying attention to this. So if their phone is semi-decent, not even great, even if they fail the first time, they can still have a second phone and probably still get 100, 200,000 orders. If you can do that, I'll be extremely, extremely happy. And on the date of the launch party on August 16, 2011, never forget this. I walked into the area in Beijing called 798, artsy area. 2,000 people showed up to the phone launch party. And when Lei Jun announced that the phone will cost 1999 renminbi, which is roughly about $310, people start clapping. And within the first 34 hours of the news, 450,000 units were ordered at $19.99, $310 each. We're like, phew. Okay, that $1 billion valuation, it was worth it. Because that's a lot of money, $310 times 450,000 units. We are okay. It's much more than what I expected for the whole year, done in 34 hours. That, I think, signified that internet is very powerful. You have one interesting product, a lot of people pay attention, word of mouth effect will show you that you can reach a lot of people. I remember for the first 2 months after the product launch, I would go to a barber shop or small shops to buy stuff. And in one instance, I was getting a haircut. I was playing with my Xiaomi phone. My barber was asking me, what is that? I said, it's a Xiaomi phone. He said, never heard of it. So he asked around, has anybody heard of Xiaomi before? No one has, except this one person, all the way in the back, who is probably the most techie, most savvy phone guy in the group. He said, oh, Xiaomi phone, it's the hottest thing, new thing right now. You can't even get it. You go online and there's a queue. You have to wait for it. And suddenly, within that one instant, all the other 6 guys said, well, really? Why is that so hard to get? How is that different? They start all asking questions. So the guy who knew the answer was very proud to explain what he knew. So within that 1 minute period, you get 6 new users all trying to figure out how to buy that phone. And the cost of Xiaomi, 0. And that happened everywhere. And Xiaomi figured out a way to run Xiaomi fan clubs to have these users who know more than others to be actively involved in a way Xiaomi build product and give feedback to the company and get recognized for coming up with good suggestions. So that culture is completely different than any hardware company has ever done phones before. And when you see that happen, and you see the CEO of Xiaomi having 4 million fans on Chinese Twitter called Weibo, Sina, and Tencent combined, you know that your marketing reach is unparalleled to any phone company has ever had. And if you take that kind of methodology and approach in other categories, it's difficult for other people to copy because it's a very different way of treating your users. Beijing had a famous saying that users are not God, users are your friends. So if your friend calls you for help, you're trying to figure out as quickly as possible how to solve that problem because he or she is your friend. So they want to get back to the user complaint, ideally in 24 hours, but definitely no more than 72 hours because you don't want a friend wait for you for that long. So if people have this kind of customer service approach and can get back to users quickly, it creates a different kind of user behavior and culture. And that's why they can do that well in China. And I've heard a lot of people telling me that this approach is very China-specific, that Beijing is a very famous person in China. That's why Xiaomi grew. I never think that's the right answer. I think that if you have this kind of approach, that can work in any emerging markets, anywhere, because people always want to be heard. People always have a chance to express an opinion and see that coming to some kind of fruition. So if you have a company that has what in China called the internet way of doing things, you are much more likely to build a big company quickly. And if Xiaomi actually break it down to 2 categories, what is an internet way of doing things? On one side, their goal is 爆款, means they want a high-selling product. Xiaomi only has 6 phones since they started, only 6 models over the last 4+ years. And they only started launching the phone in 2011. So really only 3 years, 6 models. That's all they do. And it can be, $6-7 billion of net sales a year. That's amazing. And because people are smart, they easily compare products to each other. If your phone comes out with 100 models, no one has the energy to figure out how each one's different. You go to a carrier to give you a calling plan, that's like 2 different ones. You're going to be confused. So the goal is to make sure stuff is easily comparable, really cheap because you cut out the middleman already. If your marketing cost is 0, you have direct distributions to the end user over the internet. You don't have to rely on any offline retailer, and the stuff is hard to buy. Then of course people will be flocking to it and creating a strong following for it. So if you have fewer SKU, you can focus better and make changes quicker because you won't have few SKU to worry about. It's easier on a relative scale to become better at what you do because you're not distracted by so many different models and SKUs. And of course, you can respond at much quicker speed because you're more streamlined. On the marketing side, the goal is to be able to form communities with the users so that you can have a direct relationship with your users. So you know what they like, what they don't like. You don't need to rely on a retailer to tell you 2 months later. And the word of mouth effect is important. So it's important. If it's a problem early on, Xiaomi is the first to have people come out and apologize and want to make changes. They do not want to let stuff linger on. They actively engage social media and create new content to interact with users so that they can get feedback from users quickly. So they have professionally generated content that leads to more user-generated content, more feedback, more comparison on products. So they are on top of things. And finally, like I said before, treat your users as friends. If you can do that, we have much better chance to build a very interesting company in a mobile internet era. So with that, I conclude my presentation and welcome any feedback, suggestions, questions on this.
Do you want to go ahead first?
Yeah, quick question for you. Excellent presentation, really enjoyed it. Felt like I just been with the mind of a genius.
It's mostly Beijing. I have to give credit for coming up with the methodology in the first place.
Okay, so you just said that Xiaomi is modeling with a very few number of SKUs and then targeting the mass market. Could you please share your thoughts around growth, revenue, and more SKUs in the future?
They are not a public listed company, so he has been very careful not to make a lot of projections. But in general, a new model every year is their goal, and now they use different processors in the back, so they come up with phones that are cheaper because the processor is a huge chunk of the cost of goods sold. So with more different processors, they can come up with 2 or 3 different price phones. But the goal is not to have like 10. Just 2 or 3 a year would be already a lot.
Hans, you talked about selling non-branded products.
Right.
As something that's really now trending now, especially in non-top tier 1 cities. I'm kind of curious about what do you think is the future of marketing? Because normally one of the canonical principles in marketing is establish a brand.
Right.
So if you're selling non-branded items, how do you do it? Outside of say Xiaomi doing it virally, but Xiaomi is obviously a well-known brand now.
Right. I think you will see, especially for emerging markets, 2 areas. One, the people who can learn from Xiaomi, who can figure out how to do stuff using a similar approach, will figure out how to build brand in the new era. That will be a small subset. Most people will leverage the brand of a platform, someone like a Wish or a Taobao, who's building a brand by offering stuff that has high price performance ratio. So for those who cannot build a brand, selling on these fast emerging platforms makes sense because these are growing at a much faster rate than a Walmart does and doesn't charge you a lot like a Walmart would. So you will see bipolar kind of a thing. That's in emerging markets. In the US, I think initially for the next, maybe even 10 years, nothing much will change. It will still be, brand leveraging social media to reach out to more users. The traditional way will continue to evolve. But what people will not notice is that the bottom of the pyramid is growing at a much rapid pace.
First of all, great presentation. Thank you so much. When the smartphone first came out, it was that rectangle piece was a product defining in the category, right? And then, as far as wearables go, the watch is sort of the thing that is gaining a lot of popularity, and the glasses haven't caught on so much. My question is, as far as the Internet of Things, connected smart homes category goes, what is the 1 or 2 devices that you think will have the highest potential to reach mass market? Maybe you can speak a bit about the market in China, but also in general.
That's a good question. I think no one knows the exact answer today. Most of the wearable stuff you see are very niche. So I think if iWatch continue to improve, just like iPhone did in 2007, the Chinese brands will figure out a way to react to that and make it even more popular. I think iPhone historically has always been Apple in general, been a company that's on a cutting edge of innovation and coming up with stuff that just mind-boggling. And more power to Apple. Without Apple, the world would be a very different place. But to drive smartphones to the bottom of the pyramid, you had to have Android come along to help to do that. So I think in the next 5 years, for sure, there will be other wearable and stuff you find at home, a lot of home appliances that will get disrupted and changed. I can't say which one will be first, but I think that you will see a lot in the next 5 years. And I think China will play a huge part on making that happen.
Thank you.
I have a very broad question. I wonder if you can share your opinion of the behavior or attitude of Silicon Valley venture capitalists towards mobile internet companies in China, particularly the small ones, the new ones.
I think the attitude is changing more. I remember 10 years ago, most people regard China as a nuance, as something interesting, but kind of hairy. Most entrepreneurs are not very experienced. Valuation is relatively high for people's inexperience. That attitude is changing. And I think when people see Alibaba start investing here and the size of their market cap, people start to ask a lot more questions on how to tap into that, both for defensive reasons and offensive reasons. So I think attitude is changing. But at the end of the day, if you haven't lived through it, it takes a while to get used to it. Does that answer your question? Go ahead.
Hi. So one thing that I think was really interesting about your talk was your interest in India and kind of how India's kind of what's next. And I think it's interesting to kind of take this attitude of, oh, find the Alibaba of India or find the Tencent of India. But I mean, what are your thoughts about how internet economies in India will be different in terms of the development from how things were in China?
I think, of course, it will be different because each country is different. Some of the business models would be similar, but it will be applied differently for sure. Flipkart, as the model, you can argue, is very similar to Amazon, more of a B2C structure. But they probably will at some point open up, do more marketplace model as well. So it will all evolve based on the intelligence and the drive of this particular entrepreneur. I remember 10 years ago, everybody think that, hey, whatever's in the US, just copy China and you're done. But over the last 10 years, they proved that there's a lot of localization, local innovations that China had that was different from the US. And the same will be happening in India. But even in China alone, offline retail is roughly 90% of total retail. E-commerce is roughly 10%. It is roughly about 4%, 3% in Japan. In the US, it's roughly about 8%. In China, I think over the next 10 years, just China, not anywhere else, that number can go from 10% to as high as 50, if not more. So even in China alone, you will see a lot of disruption, even just moving from offline to online, because online is just much more efficient at what it does. And it would dramatically change that part of China. I think a lot of people read negative press about China. That's the old China that people know about. The one that's slowing down to either 5% or 7%, depending on whose stuff you read. You see that people are moving money elsewhere, offshore. The real estate market is kind of in a limbo. That's one China. But the other China, the one that's rapidly changing because of online, because of internet, is the stuff that people don't read about as often. And that will have a huge impact on this China in the next 10 years.
Do you think that with the growth of China over the next couple of decades, that their approach towards brand value and IP and some of these other softer issues are going to change, going to continue to evolve, become more Western-like, I guess?
I don't know if that would be exactly Western, because at the end of the day, IP today is not an issue of, did you clone someone? IP is more of the issue, hey, I have it, you don't have it. If you become big, I'm going to use that as a weapon against you. So it is something that I think it will evolve, and I think Xiaomi and other players in China are actively building their own IP portfolio. Because then, if it's a battle, you can stop the trade. Then it can protect you as well. So internationally too. So I think the companies will evolve, because you want to go after the global market. At some point, you will come up with a different rule of law, and you have to figure out a way to deal with that. And Xiaomi has people from Android joining them, so they're definitely aware of what needs to be done.
What would you recommend for a US startup in the hardware space that wants to enter the China market? Should they find a Chinese partner, or should they go through online distributors like Taobao and stuff?
I highly recommend the second method, going through Jingdong or Taobao or Xiaomi, because you can reach a lot more users quickly. If you can get Apple to sponsor you, that's always you pay the arm and leg to Apple to let you get into the Apple Store. Of course, that will help. At the end of the day, is still having an impressive product that people will care about. Then the channel issue becomes less of a problem. Having good supplier in Shenzhen to work with, drive the cost down, obviously is very important, because without cost has to be a component of how the value is perceived.
Thanks for your fascinating presentation. So you said that the Chinese company, Taobao, Xiaomi, I mean, you said that it's going for global, not only Chinese market, but also the US or others. But it seems to be that, I might be wrong, but seems to be that still this is in China, something like a domestic market. Because domestic market is too big, so it's performance is quite good. So do you have any opinion about, you have some rush rice, which is a Xiaomi model, and is this kind of model is universal? So Xiaomi, when they enter in the US market, let's say, then they can use the same kind of method, or maybe you need to figure out kind of different strategy for international.
I think that's a very fair question, and then we get that question a lot, and those are fair questions. The way I think about them is that the last 10 years, Chinese internet companies trying to figure out what is the internet and what does it mean to build an internet business. And right now, I will argue the Chinese internet market is probably the most cutthroat, most competitive market in the world. The kind of tactics that people complain about Chinese company versus American companies, I think Chinese company against each other is on the borderline being nasty. I've seen companies that send own people as fake employees to join other companies to understand what the other company is doing. I've seen companies that actively fake shop the competitor's website and then return all the products to them. The kind of tactics that they will go, the Chinese company would do against each other, I think they're much nicer to U.S. companies because they worry the backlash. So when you have that kind of competitive landscape, and the market has now what, 500 million smartphone phones now. Over the next 3-year period, you can easily double if you have lower cost phones. Pretty soon it becomes a replacement market. So you have to go abroad because it's a replacement market. It's a market that arms you to be the leanest, hopefully not the meanest, but it makes you to be very efficient so that you have a capability to go outside. So I think what determines how far Chinese companies go will be how fast they can globalize. I was trying to be helpful to Xiaomi, and they were able to recruit Hugo Berra from Android to join them. And very recently, Hugo hired someone else from Android India to join Xiaomi to run India. I'd like to see more Silicon Valley talent, especially those that are more globally minded, to try different companies. Because I think that it will make the world much better a place when different ideas and value system are shared and discussed. When a company is more global, it is going to be more careful of how it behaves than a company that's focused just on the domestic market. So I think in general, whether you look at it from the angle of democracy or the angle of being more progressive, more respectful of law and IP, it's good for Chinese company to go global. It will have more positive impact. And I think that as confident as Chinese as a country, I think over time the Chinese government has already realized that the best company that can go global from China is not a state-owned enterprise, it's this internet guys. And it will be good for Chinese government to respect internet more going forward as well. So overall, I think it's a positive thing for both the country and the company. Yeah, and I don't think that's related to China. I see Korean companies being more aggressive. I think the success of Line changed a lot of mindset of Korean entrepreneurs to want to go more global. And I hope that it will have the same impact on the Japanese companies as well. Because I think it's just good to be more global and see more beyond your own country.
One final question over there.
I think the States has leveraged the openness to immigrants and to smart immigrants to come, and they attract a lot of immigration in Silicon Valley particularly. How is China open to immigrant labor? I'm completely ignorant to it, and I just want to know what it is, because the States has that level,
Right.
then they can actually use it pretty well. And we've seen it here with a bunch of immigrants here.
I think immigration laws aside, if anybody has a choice to decide where to live and purely where to live, I don't think U.S. has to worry about anything anytime soon. But having said that, the amount of growth, I mean, if you had joined Alibaba back in 2005 versus joining Google in 2005, one company grew, 4x valuation. The other one grew like, 60. It is mind-boggling, the difference. So I hope there would be more of transfusion of different talent across countries, because it would be just good for everyone when that happens, for the individual as well as the ecosystem. Right now, it's not that hard for someone, like I carry a US passport. It's not hard for me to work in China. I just have to want to do it and go through the process of getting the work visa and a resident visa. It's more time consuming than it is here, but it's fine. So from a last rule standpoint, that's not an issue. Whether people want to live in China, especially Beijing, that's a separate matter.